stock market report for the week of May 17th. As you can see, the markets have been relatively pretty crazy the last couple of weeks. I know I haven't done a report. I've just been busy with real life things. But you can see inflation concerns have come into the market. Everybody knew this was coming, so this is really not a surprise. But you can see the markets are definitely feeling it. You're also seeing a lot of shorts in the stock. If you look at a lot of these companies, especially the tech companies that really ran up the last year or so, you've seen some of those short floats increase in some of those stocks by some of them as much as 40-50%. So you have a lot of hedge funds that are shorting the market right now. But as you can see, what's been happening here really the last week, you can see the Dow actually went up and hit an all-time high. Amazingly, we're still hitting all-time highs, but you can see we've had a pretty serious pullback, and you can see we got about a half retracement. If you look at these two pivot levels right here, most likely we're probably going to get rejected here. I doubt it's going to go through here, just the way the market is right now, and we'll probably trade all the way back down to this level. I'm guessing probably this week, and kind of test this support level here. And I think two things are either going to happen. Either we'll cut right through this support level and come all the way down to the 180-day. I actually think that that's more likely, because I do think that inflation concerns are still an issue, and I don't see those really going away for at least a couple months. Probably, most likely not the end of the summer. Like, basically what needs to happen is those concerns that people have with inflation, they need to start lightening up. And once people are not as fearful, and as you see some of the reports that involve reflation, if you see those start to flatten out, then you'll kind of see the fear in the market kind of settle down. And I think that's going to take a couple months. But we very well could trade down here, and we could do a consolidation basically from this level here, this pivot point, and possibly this pivot right here. And we could just do a consolidation between this level and this level here. So basically, what is this? 33,700, and I'd say roughly 34,100. So that's probably most likely. But like I said, as long as inflation, I'm gonna actually look for this to probably take another leg down. Not this week. I think we'll probably trade down to this level, and then maybe the week or two after that, we'll probably come down here and get down to the 180-day. As you can see, that NASDAQ is basically the same thing. In fact, it actually looks like the NASDAQ is actually leading the Dow. You can see NASDAQ sold off here, had a half retracement, and then you can see on last Friday, we got up to this point, and then we started to take a leg down, got here to the 20-day, and I'm probably actually going to look for this thing to probably trade down to probably this level here this week. What is that, 12,300, we'll say. So that's probably what's going to happen. And then who knows, we could potentially even trade down to, 12,000, 12,050. I doubt we'll go down that low, but probably this looks like a pretty solid support level here on the NASDAQ, 12,821. That's probably my expectation for the week, is I probably see us trading down to the support level. I don't really see us going up to 13,700. There's a lot of pivots here that this thing's got to take out. If this thing's going to go back up to record highs, you got to take out these two pivots here, and then you got a quarterly pivot here. There's a lot of resistance up here, so I just don't see that happening. Like I said, most likely what I'm looking for is probably 12,800 probably this week. I definitely think we'll trade down to this level, and maybe consolidate, let's say, between 12,800 and 13,059. The SPY, I think the SPY is actually kind of interesting. The SPY is actually, it's either leading or lagging. I'm not really sure what it's doing, because you can see it's actually, this thing actually could retrace all the way back up to 420, 419. I'm surprised it didn't get kicked off at this pivot here. So in my opinion, I think it's lagging. So this thing may open, we may open green today and actually test 419, and then I would probably look for this thing to trade all the way down to probably 403 this week, 408. Like I said, I personally right now I have a couple SPY puts. I think this thing's going down to 385 and sometime I'm giving it to the end of June. I'm not exactly sure. I think they're June 19th is when they expire. So I think the SPY's got more downside. In terms of my swing trades, I know I had a couple that I was in that I was going on, that I was following on this channel. My max trade, I'm completely sold out of that. I think it got up as high as $46. I'll actually pull them up. If you guys remember my max trade from a few weeks ago, I ended up selling it probably around $44, $45. I know I had a couple price targets, so that was a nice trade for me. I can't remember what my total profit was, but I want to say it was $2,500, $3,000. So that was a pretty good trade for me. I'm still in AYX. AYX it's just been consolidating here. They had a really good earnings. They had a solid earnings, and the company went up, and then it's just slightly come down with the rest of the market. You can see them down a little bit. I'm still sitting here at an average position of about $80. Like I said, I'm not really concerned about it. I like this company long term. They do data analytics, and the reason that you had this massive sell-off is during a lot of the issues that we had last year. They really trace back their guidance. Just a lot of larger corporations that they were selling to just didn't really see analytics, just with everything else that was going on in the world at the time. So a lot of those companies kind of played it safe. But now that things are starting to come back to normal, they really upped their guidance for the quarter, and their sales and their EPS was relatively pretty good. But if you look at this stock over, do the 3-year chart, I mean, you can see even from, let's go to March lows. I mean, here's March lows from last year. Where is it? Right about here. So you can see it's, that was $84. I mean, we're at $77 now, and you can see this support level here is really, the $77 range. It's really been holding. Could there be more downside down to $60? Possibly. I personally don't think it will go down there. I definitely don't think it will go down to $60. And hey, if it does, I'll add another 100 shares. Because you can see I'm at 120 right now, so I'll add another 100 down here. Like I said, this is a long-term thing. Once inflation concerns, I mean, this stock, when it runs, it can run. I mean, you can see here. I could easily see this thing running to $123 off of a solid earnings report, or even before they report next earnings. So like I said, you can see it's trading way under the 180 day. It's trading under the 20 days. So like I said, I like this stock. I'm not really concerned about it. Right now, do I think this is a good entry point? Absolutely. If you're willing to swing this trade long term, I mean, like I said, it could take 3 months, 6 months before it goes back up to these levels. But if you're willing to hold it out and you like the stock, you like the company, by all means, go for it. All right. And kind of something else that I'm doing right now too is, this is a really good buying opportunity in the market right now. I mean, you got a lot of sales going on with a lot of stocks, especially some of the growth tech stocks. Like I said, inflation is not going to last forever. So, fear is always usually a temporary thing. So as long as you have these inflation concerns, which in my opinion aren't going away for a couple months, again, there's definitely more downside to some of these stocks in my opinion, but you just have to have the right strategy in terms of how you want to approach these stocks, because like I said, it is a good buying opportunity. And like I said, last year, what happened in March, those March lows from 2020 was a once in a lifetime buying opportunity. And in my opinion, I think we're getting another one. And I know, because I lived through the 2008, 2009 financial crisis, and I knew what kind of buying opportunity that was. And I kind of see kind of the same thing. So you really have to take advantage of these. You either know, if you start buying in now, that you'll probably definitely have some short temporary pain, but you just have to have the right strategy. And what I mean by that is, if you look at JMI, I really like this stock. I just think that they're positioned really well to kind of be like that next Amazon in South America. I encourage you to do more research on the company, but you can see they ran up as high as $69, and this thing's down to $29. I mean, it's really just been crushed. And if you look at the 1 year, I mean, you can see in 2020 in September that this thing was down to $8 and $3. So how much lower can it go? Could it come down to these levels? I doubt it. I doubt it sees $8, but it can definitely go down to another $16. You can see it's trading way below the 180 day, the 20-day. You have a death cross here, so this stock's been pretty beaten down. Kind of what I'm doing is as it goes down, because like I said, I think the next couple months, I think we're going to have more downside in the market. I don't think you're going to have as an extreme drop as this, but maybe another 10% down to the downside. But what I'm doing is I'm just buying 10, 15 shares as this thing drops. And I'll kind of show you what I have here. See, I'm long 15 shares at $25, and probably at $22, I'll probably buy another 10 shares. $20, I'll probably buy another 10, 15 shares, and I'm just going to keep adding to my position as this thing comes down. Because, like I said, I like the stock long term, and I plan on holding this. And this is more of a strategy I'm doing in my retirement account. It's not so much my day trade account, but I'm just adding things because I look at holding these for 5, 10 years. And I'll just run through here some of the stocks that I'm really looking at, that I'm doing this with. DKNG, DraftKings, I really like them. You can see almost death cross here, crossing the 180 day. I mean, look how far down this stock is. So, and you can see this thing back in 2020 when this thing became an IPO. I mean, it went an IPO at looks like 27, $28. I mean, we're getting there. So again, I bought in a few shares. I'll buy in a few more if we can get down under $40. I like DraftKings. I think it's a solid company, a lot of upside. And then you have PLTR. I actually already kind of went pretty heavy on this stock. I really like what they do. It's a tech company, software. I already got 100 shares. I'll probably add another 100 shares at $14. And do we get down to $9? Possibly. And I'll just add more down there. Like I said, these are long-term skills. Here's another stock I really like. I mean, they were as high as $46. But you can see we're getting down into some crazy levels. They went IPO at $10 and we're at $15. So time to load the boat, guys. Seriously, you're not going to see these type of deals anytime soon. So take advantage of it. And like I said, there's a reason this thing ran up to $46. It's because you had a lot of hedge funds, people like Cathie Wood, Arc Innovation, a lot of these other companies that saw the value in the stock, the potential of it. So, and they have a lot of smart people that are analyzing these companies. If you don't think Cathie Wood's team has a bunch of smart people from Harvard and Stanford that's really analyzing these companies and what they do and their growth potential and the market segment size in terms of revenue and how fast they can grow, trust me, they do. So definitely, take a look at some of these stocks. Like I said, you're not going to have an opportunity like this. Chewy's another one. I really like Chewy. I actually own these guys when they went IPO in I believe it was 2019. Getting in like around $30. They kind of ramped up in 2020. I sold them before I think I sold them around in January, February of 2020. Let's see what they got up to. Yeah, we have to go back further. But yeah, anyways, Chewy's another company I like. I just really think sure they compete with Amazon. Do you actually? Because I was in the swing trade, I kind of sold out of it. Made a little money on it, but then on my second target I was going for, I can't think I broke in. Came around, I broke in even somewhere around there. That's when the thing started crashing. So, anyways, I really like these guys long term. I think they're doing things a little bit different than Amazon. They have a different marketing strategy from a technology standpoint. When you look at their online store, I think they're doing some really cool things. And then finally, I have on here Tesla. I'm a buyer at 550. Like I said, I'm not going in huge. I'll probably buy a couple shares. and then at 500 I'm a buyer again. At 450 I'm a buyer, and at 400 I'm a buyer. And do we get down to $281? Do we get down to $157? I don't know. Possibly. But like I said, I think we're Tesla. I don't see Tesla going below 500. Like I said, everybody knows who Tesla is. Solid company. And everybody knows they did their 5-for-1 split back in the fall. So, anyways, possibly death cross here. We get some more selling coming into the market. You could see this 20-day go below the 180-day. Pretty crazy. And then, a good alternative to Tesla, who I think is really going to own the Chinese market, is NIO. Again, I'm holding these guys. I have them in my long term. I think I'm in at around $18. So, do I think they're going to go down to $18? Probably not. Could they go down to 25 in the next by June or July? Possibly, potentially. I think there's a really good chance of that. But again, this is another stock that I like long term, and I definitely think you should be adding as these stocks slowly go down. Like I said, don't go in full position size. Go in five shares, 10 shares. Maybe it's 2, maybe it's 1, depending on your account size. So that's all I can really say. Like I said, we're getting great opportunities. Can you short the market? Sure, you can short the market right now. But you want to short it on the pops. Like, let's say NIO comes back up to $39. We get up to the 20-day. Yeah, it's probably a good short. But like I said, I'm focusing more on a long-term strategy. I think that at where some of these prices are with a lot of these growth stocks, I just think you could, in 5-10 years, I think you could be sitting on a lot of money. I personally know this from the 2008-2009 financial crisis. Like I said, you want to be buying as people are selling, and you want to be selling as people are buying. So, the Warren Buffett strategy, it's basically how the market works. The market works off of fear and greed. So, hopefully this video was helpful. Hopefully you guys have a good week trading. We'll see you guys later.